The coil is getting tighter and tighter on the market, and we are about to explode. The stage is set for a massive move on the market. But the question is, which way is it going to go? Well, if we take a look at today's levels, guys, we actually don't know. We stayed above 518.22, but we also did not get above the 9-day moving average. We are in the exact same spot that we were yesterday. Quite literally, with S&P only going up 0.06%, crumbs on the day, and the Nasdaq even lower, 0.03%. So basically, we opened, we went around in a circle, and then we closed. So that was the day. Futures as of last night, when they opened, are essentially the same exact thing. So literally a straight line going sideways. So again, not much help there where the market could be going, but we're setting the stage up. This coil is getting tighter and tighter and tighter. And we're going to be talking about some levels that we have to pay attention to for the opening today, along with levels that if we start breaking above, we could get continuation with the CPI move and or reversal, right? Depending on what it is. So let's take a look first at CPI. Well, first of all, CPI expected to come in like we covered on a weekend deep dive, 0.3 for the months, and then subsequently CPI going up while core going down. However, that could be sticky just because, what the Fed actually really looks at is the CPI number. That's the one they care about. We would be back where we are in January. However, like we covered in yesterday's video, we basically said that they could just rule it out to Fed's Powell said that it's only one data point. Are we going to get, it doesn't matter, right? So they're going to find a bullish way to run this market up. And they're basically going to smash the buy button. And if you guys could, smash the subscribe button. It really helps the channel out, have bell notifications on. We cover all these events when we come out for live streams, so make sure you stop by. We read all your comments, questions, we take your ticker requests, so it's a really fun time. And if you're enjoying this content, hit the like button. It really helps YouTube out and lets them know that you enjoyed this video and pushes it out to more people. So thank you so much in advance. So, okay, CPI is on Wednesday. What do I do today? That's going to be the main question that everyone's going to have, right? Like, we don't care about CPI. What do I do today? Well, it's simple like this, right? So if we look at where S&P landed today, and I'm going to be talking about the cash market mainly because that's what you guys trade, we can clearly see that we have our range. Expansion out of this range would signal a further move. So trading above 520.18 would mean that we get the bullish rotation. We above the 9 and we'd be above that previous high around where we resisted before. If we trade below 518 really and then confirm below 517.89, and then we're looking to that downward rotation. Then we got to look into play of 512, 511. So these are going to be our critical levels for the S&P. And actually, we can take a look at NASDAQ just to see what it's doing as well, just to give us more insight, kind of giving us a broader market perspective. And similar story, the 9-day and the range to the upside is going to be where we're going to be looking. However, really, the NASDAQ's pivot point is at 445. So we really need to start getting up to that level to really start pushing this market higher. We do not want to come back and retest our 50-day moving average after retesting it twice previously. That would be bearish. So any deviation below really 440, I would say, or at the most 439.20 would be a bearish sign, and then I have to be looking more bearish skewed on the market. We'll be covering a couple stocks that you guys have to pay attention to just because they're showing weakness and they are a huge proportion of the S&P and the NASDAQ. So it's going to be very, very important that we pay attention to them. And as we can see, 442.50, which would be above the 9-day moving average, which was sitting at 441.03 on the Qs. And that would definitely be a bullish rotation to the upside, setting up for a nice CPI win. Now, what are the companies that we have to pay attention to? Because, well, if you're not paying attention to these, then you don't know what the market is going to be doing. Well, simply Apple, right? I cover Apple a lot on this channel of why it's important. Well, it's the second biggest company in the market, and it blew out its low of the day and actually closed below the previous low. This is a very bearish sign. However, Apple has not yet confirmed, right? I want to see confirmation through the volume. Right now, I'm not getting any confirmation that this is the actual move with volume. I want to see a nice volume day, similarly to how we had here, to confirm the move to the downside, because easily we could be setting up that W pattern here to fake everyone out to the downside and then rotate back up. So for Apple, we're going to have to look for that 168.49 price point secondary close and really with volume. So we really want to see 167 get printed, 166. We want to see carnage in Apple. And again, I don't think we're going to get that because of the next thing that we're going to cover. If we look at VIX, VIX is selling off right now. We are not below the 200, which means we have to still stay on our toes for what can happen. However, VIX below $14.67 would be taken as bullish for the market. If we close tomorrow below 14.67, then I'd be looking for a CPI bullish print, because that means people are deleveraging off of insurance, and then they're more willing to go into the market. And there's no better indicator of a bullish mentality, stock, asset class than Bitcoin. Bitcoin by far is the biggest bullish asset class out there, and it's looking strong, right? Bitcoin had a massive day on the day, up about 6.43%. So a lot of risk on mentality in the market, even though the market was a chop fest today. And some of these bigger names, like for example, Nvidia, looking like they're a little tired. However, they have not broken down. We're kind of consolidating this region. That coil is winding and winding and winding. If we take a look like Goog, for example, strong market. Meta as well, having a strong market. Tesla going kind of sideways here, so not really breaking down, similar to Apple, right? Tesla and Apple have shared that bad stock vibe since the beginning of the year and really haven't been able to shake it. So it's going to be curious to see which one shakes it first. However, we do also have to talk about some of the warning signs, and that is going to be the yields. Yields are going up like no tomorrow. And well, this channel or bear flag pretty much getting invalidated because the flag is becoming bigger than the pole. So again, if this thing goes any higher, then we could be expecting a complete invalidation of this pattern. We could, in theory, and I saw an article today that bonds are looking like the Fed is not done hiking rates, which I call a little BS on that, just because if we jump over the 2-year, we can clearly see 4.793% is where we expect the 2-year. So we're still expecting cuts in the next 2 years. Maybe not as much, maybe only one cut a year, maybe only two cuts a year. Kind of that slower pace of runoff that we're seeing here. That is what the actual bond market is pricing in, versus what people are saying that, they're thinking of rate hikes, right? To me, I would have to see the 2-year back above 5% in order to even fathom that. And maybe, right, I'll keep you guys updated on that, but I don't think that's going to happen. I think that we do possibly have a kind of cup and handle right here that we could be breaking out of into a bullish run on the yields, which then could lead into that scenario. However, I think that this is more to do with the uninversion of the yield curve, kind of just going sideways, consolidating before the possible rip down. And we could see that with a variety of black swan events. We have the bank earnings coming up that we covered on the stream that were very bearish, right? So if we jump over to JP Morgan's earnings expectations, this was previously reversed completely, where we all had bullish expectations, but they have been revised down, expecting flat or miss on their EPS, and the stock is still running up. So that's telling me that people aren't really listening to this the same way they're not really listening to the bond market. They're not looking at the risk possible that the Fed does not cut 3 rate cuts this year. And we see that with, for example, like TLT. TLT kind of staying at these lows. The bank's basically screaming bloody murder. And I have never seen something as crossing a bullish cross, bearish cross on the moving averages as we see here. We got the golden cross here, the deck cross here, the I don't know what cross here at this point. So it's very interesting with TLT. It's just a hot mess. Bonds are a hot mess, and the banks are the ones that have to deal with them. So if we jump over to JP Morgan, as you can see here, this does not look like a company that is going to miss earnings. So Are investors going to have a reality check on Friday? I will be betting bearish on JP Morgan just because the strategy that I've employed is looking at these expectations when they're so skewed to the downside like that. I'm going to take that trade with options to mitigate my risk, but also look at a nice profit for a small amount of capital that I will be covering in the next subsequent video on Thursday. So make sure you guys are tuned in for that. But overall, crude, right? That's another thing. Crude is holding strong around here, kind of forming a base possibly right here, setting up for another run. So is crude about to break through the 90s? That would be very, very bad for inflation. And we'll see on Wednesday what that energy number comes in at. Remember, we are expecting an increase on CPI year over year. So we should, if this is just a fluke data point, like Powell says, 3.4 should be the highest. We shouldn't get another print. However, we're going to have to wait a whole month for that. And if anything is indicating by PPI, that definitely could put a sour note on everything. Even if we get a bullish reaction from CPI and Fed minutes, we definitely could get a reversal on PPI, or the market could just say we don't care, which it has recently been doing, as indicated by the Fear and Greed Index. We're right back at greed at 66, so pushing right back to where we were a week ago and kind of where we were staying for quite some time on this latest run. So we definitely could get into some extreme greed very soon, especially with this coil winding up here, a lot of price and volume just kind of congealing in this area. And really, if you want to stay out of the market until you have a confirmed break, then just wait for 512 to get violated, or 524. One of the two has to get violated to set a direction. In my opinion, once we set a direction, we're going to kind of run with it for a couple weeks. And again, April is a bullish time going into May, because a lot of people run in April, sell in May. That's kind of been the motto for the market, but we've already achieved a large percent of the gains for the market. So is this going to keep going? Make sure you guys throw it down in the comment section below, and I will update you guys tomorrow on any new developments in the market, along with anything in the reverse repo. We'll keep you guys updated, so make sure you follow us on X at fatalinvesting.com.x or whatever it is. But thank you all so much for watching, and I hope to see you in the next one.